Very important. Rich people don't buy luxury watches to tell time. They buy them instead of stocks, sometimes instead of real estate. That sounds crazy, but once you understand why, it makes complete sense. Let me break it down. Most people see a Rolex or Patek and think one word: status. Wealthy buyers see something else. They see an asset, not a fashion item, not a toy. A compact, high-value asset that works differently than stocks. That difference is the entire reason luxury watches exist in serious portfolios. Stocks can be diluted. Companies issue more shares. Luxury watches can't. Rolex limits production on purpose. Patek Philippe produces roughly 60,000 watches a year. That's it. Demand keeps rising, supply stays controlled. When production stops, prices don't collapse. They usually rise. Scarcity is why certain watches quietly outperform the market over time. Here's something most investors never consider. $1 million in stocks lives inside a system. Banks, brokers, regulations. $1 million watch fits in a safe, or on your wrist. It can cross borders, be sold privately, or liquidated through auctions anywhere in the world. For wealthy investors, flexibility is not optional. It's a feature. Stocks react to headlines, fear, euphoria. Luxury watches don't move that way. Collectors don't panic sell because of a bad news cycle. They hold. That emotional insulation reduces volatility. Rich investors value assets that don't demand daily attention. Quiet assets often win long-term. Stocks sit in an account. You never interact with them. A watch exists in the real world. You can wear it, enjoy it, pass it down. If the value increases, that's upside. If it stays flat, you still own something meaningful. That asymmetry matters. Very few assets provide both personal enjoyment and financial utility. Luxury watches do. High net worth investors don't think in single assets. They think in systems. Watches offer exposure outside traditional markets. They're not perfectly correlated with stocks or bonds. That reduces overall portfolio risk. For some buyers, watches also offer tax or privacy advantages, depending on jurisdiction. It's not about one benefit. It's about optimization. Now, the truth. Luxury watches are not for everyone. Liquidity depends on the model. Condition matters. Authenticity is critical. Buy the wrong watch, and you'll lose money. That's why wealthy buyers focus on proven references, brand history, scarcity, long-term collector demand. This is strategy, not impulse buying. So what does this mean? Luxury watches don't replace stocks. They complement them. For wealthy investors, watches provide scarcity, portability, stability, diversification, enjoyment. This isn't fast money. It's controlled money. So here's the question. If you had to choose long-term, stocks, gold, or a luxury watch, what would you trust most? Leave your answer in the comments. And if you want clear, no-hype insights on luxury